Hello, financial planning students. Sorry I haven't been in contact with you regarding my voice. However, I've definitely been in contact via Google Classroom. I hope everybody is doing well. I hope everybody's healthy. I hope everybody's paying attention to the social distancing guidelines. I'd much rather be in front of you guys and having fun learning in school than sitting at home doing this, but it's what we have. We're going to make the best of it. I apologize for the length this might be. Might be a little longer than most of the ones that we're going to do. I want to make sure that we're up to date. First off, if you noticed, the district has changed their policy. When we first left school, we were on a review and no grade mandate. I did send out a handful of review opportunities, one or two anyway. To be honest with you, kind of disappointed in the response. Only half of us responded with those assignments. I've graded them all or reviewed them all, made comments on them all, and sent them back. That was not graded or not required. However, everything moving forward is. I want to make sure everybody understands that starting on Friday, last Friday, so just a couple days ago, we are now moving forward with content, new stuff, assignments, graded. Everything that we're doing starting now is marking period 4. So please make sure that we're checking Google Classroom daily. I will be posting probably 2 assignments a week. They will not be huge or long in length, but I want to move forward with new material. Today's conversation is going to be on the credit cards and a review of the credit cards. I will post a Google form assignment when I'm done with this little video and recording that you guys have 2 days to work on. It'll be due on Thursday. But I just want to go over what many of us did, half of us did on the credit card assignment, go over some key credit card information, and then I'll hit you with the assignment. I have shared this or will share this presentation. Some of it we covered in the beginning of our credit card unit. And you will be able to see those things. So I'm going to skip to the middle of the presentation and go over a little bit about that credit card assignment. On the assignment, it said, do you think it's a good idea for high school students to have a credit card? This is an opinion question. Personally, I don't think so. I think it's a little early for you guys to have a credit card to put yourself under that type of financial stress. They're very easy to use, but tough to pay for. So I don't think high school students should be having a credit card. I don't think it's too early to learn about them. That's for sure. But having one, I think it's too soon. You have to be 18, and chances are if you applied as an 18-year-old, the credit card company would either ask you for a cosigner or require you get a secured card. A cosigner can be anybody with good credit. Usually it's a parent. I think 18 is a little early. However, college age, and definitely as soon as you get out of college, I think that's the good time to get a credit card. Something that probably has a low maximum balance so that you can't run up thousands of dollars of debt, but something where you can buy some small things, go out to dinner, buy a new suit, some clothes, pair of sneakers, and pay it off every month. It's a great way to establish credit. If you wait until your first purchase of an automobile, your first purchase of, let's say, a bunch of furniture or appliances or even a home, and you don't have a good credit history, your interest rates will be higher and cost you thousands more in interest. So establishing credit once you are into college or at the end of your college career, I think is a great idea. Making those small purchases and monthly payments to establish a good credit score. It'll help you for sure down the road. There's a video link there that you guys can watch. I think it's good. Some questions in the middle that help you out. As we mentioned, cosigner is a way to get parent support. Another way to do it is a authorized credit card user can add you or a credit card holder can add you as an authorized user. That's going to require, obviously, the authorization of that person. That way you can kind of learn how to use responsibly a credit card, but it's not really under your name, but you are authorized. Things that don't require a parent or a guardian is you can make small payments on student loans while you're in school. $25, $30 even, very small things. That's a great way to start establishing credit. It'll automatically come out. And then all of a sudden you get out of school and you've got 3 or 4 years of credit payments and a good credit record. A secured credit card. I'm going to talk about this more extensively in a little bit, but a secured credit card, you don't need anybody else's authority. Once you're 18 years old, that's something that you can also do to establish credit. It's also a good idea. The graphic at the top, the infographic, is kind of cool, and we'll show you a bunch of different things and benefits of making early loan payments. All right, the secured credit card. This is a great way to establish credit. The difference is the secured part is that you would have to send money in ahead of time to the credit card company. That's the security, that's the collateral. They have an asset of yours that they can hold in case you don't pay. So, for instance, you send in $500 and they hold on to that $500. And then you start using the credit card like a regular credit card. You charge it, and the next month you get a bill and you send money in. You charge again, you get your bill, and you send more money in. You don't use the money that you've sent in as collateral. They hold on to that. And the only time they will touch that money or take that money is if you don't pay your normal credit card bill. So if you default on that loan, they have the security, they have your money ahead of time, they are at no risk, and they take that money. So a secured credit card is a great way for people with no credit, or if you have bad credit. So in other words, you stumbled financially, your credit rating has dropped considerably, you are now risky. So that's a good way to reestablish credit and build new credit to dig out of that hole. So secured credit cards have your money ahead of time as collateral. It eliminates the risk for the bank or the credit card company, and you can make payments just like a normal credit card user and establish good credit with a secured card. This is a quick video on just reading a credit card statement that I'd like you to take a look at. The credit card statements are important to look at. A lot of people are fixated on fraudulent charges, all right, which is true, but to be honest with you, in the grand scheme of things, there's not a lot of fraudulent charges. It does happen, but that's not the main reason you want to check your credit card statement every month. The main reasons are you want to know what your balance is, you want to know what your minimum payment is, you want to know what your due date is. I think you should look at the interest that they're charging you. If you don't pay attention to that, you'll act as if it's not there and it's not taking a large bite out of your finances and your budget. So just to see that money build up might dissuade you from using the credit card or overusing the credit card. You also might be in a situation where you're getting rewards or opportunities from your credit card company, depending on which card you have. You want to check those out. Any fees that you might have been hit with that you weren't aware of, possibly a late fee, over your credit limit fee, balance transfer fee, international use fee, or an annual fee if your credit card has one. So paying attention to your statements, I think, is important. Take a look at that video. I think it's pretty cool. All right, some terms, review terms. Your credit card balance is how much you owe on the credit card. You'll get this balance every month. It includes all your purchases. It includes your interest that they've added. It includes any fees. Any payments that you've sent in will be deducted. But your balance is going to tell you what you owe. There is a way to use a credit card your entire life and never pay a penny of interest. And that's by paying your entire balance every single month. There are some people that actually do that. It's pretty rare, but it's very possible and something that you can do. The APR, the annual percentage rate. This is obviously the number that you're looking for when comparing credit cards. The goal is to get a lower percentage rate, and the APR that you're assigned is always based on your credit score. As I've said in class many times, if 2 or 5 or 50 people applied for the exact same credit card, it's very possible that you would all get different annual percentage rates, or there would be a slew of percentage rates. Depending on your credit score, your percentage rate is assigned, and it's the annual percentage rate. So if you're curious how much they're charging you monthly, just divide that APR by 12, and you can see what the monthly interest rate is. So an 18% APR credit card is charging you 1.5% interest per month. And if you don't think that's a lot, compare it to your savings account interest rate, which is less than 0.5% for most people. So a monthly interest rate of 1.5% is huge. Your minimum payment. This is what credit card companies love, is they show you your statement and say, hey, you owe us $3,500, but we're happy if you only send us $70. Unfortunately, many people gravitate to that minimum payment. It's the worst possible thing that you can do. It's exactly what they want you to do. If you only do the minimum payment, you'll be paying that credit card for years and years and years to come, and the interest will build up into the hundreds and definitely the thousands. And if you hold a credit card for 20 or 30 years over the course of your life, it might end up in the tens of thousands. So you need to make sure that, A, you give more than the minimum as much as you can, whatever you can afford, holding back and keeping your interest charges down. And obviously the best case scenario is pay the entire balance. The minimum payment, however, if you're stuck, they'll accept that. And if you have to send in that minimum payment. Don't be late, but always as a goal, you want to send in much as you can, all the way up to the full amount. A grace period, you might notice on your credit card statements, usually a grace period is 20 to 21 days. That's the amount of time that you have to pay after you get your statement. So if you have a charge on the 5th, you don't get your statement until the 21st, you still have your grace period, 20 or 21 days, to pay for that interest-free. Anything you could pay during that grace period is going to be interest-free. Whatever you carry over or past the grace period, that's what they'll charge you interest on. Just an idea, if you know you have to make a big purchase on your credit card, in other words, it's not a surprise, it's not an emergency, you know you have to make a big purchase, it's always a good idea to make the biggest purchases at the beginning of your credit card statement or credit card period. That way you'll have 30 days, let's say, before you get your actual statement, and then 20 more days in your grace period, so you can go 50 days interest-free if you can make that purchase at the beginning of a period. Buying something close to the end of your period, let's say you buy something on the 26th, your statement goes out on the 30th, now you just cut your payment time down to 25 days or so. So if you know it's coming, make your purchases early in the credit card statement. Some fees, annual fees. Not a lot of credit cards carry annual fees anymore. They're competing so much with each other that a lot have dropped them, but some still have an annual fee. The average annual fee, you can notice it's kind of high, $147 average, but there's many, many, many out there without annual fees. You will not find a credit card that doesn't have a late fee, however. And when they say a late fee, they mean 1 minute late. If you paid your credit card bill online at 12:01 and it was due by 12 midnight, they're going to hit you with a late fee. The average late fee is about $36. And I would recommend that anytime you get a late fee, especially the first time that you call and complain about it, 99% of the time they will waive the first late fee that you have. It might be a tougher conversation if you have more late fees in the future. Usually they'll get rid of one per year. But I would call and complain about the late fee, and even what's the word I'm looking for? Warn them or threaten them. That's the right word. Threaten them with changing credit card companies. That might do it. But if you're late, you're going to get hit with a late fee. Balance transfer fees. There are many cards out there that give you an opportunity to transfer a balance from one card to the next. So if you have a credit card that's at 19 or 20%, you can find a 0% balance transfer credit card and transfer that money over and go 6, 9, 12, 15 months sometimes at zero interest. But there will be a fee for that. A lot of times that's a good way to do it. That's something that I do consistently every 15 months. I transfer any balance that I currently have on a card to a 0% card and avoid interest that way. It's definitely worth the small 3 to 5% fee. Some other fees, cash advance. I strongly recommend you avoid cash advances on your credit cards. You can actually get money using a credit card, just like at an ATM. You put your credit card in an ATM, type in your PIN, and get cash back. The interest rates on cash advances are astronomical because obviously they have no collateral. It's an unsecured loan, if you will, and it's tough for them to get cash back. So the interest rates on your cash advances are going to be higher than your normal interest rate on purchases, and there is a fee on top of it. Unless you were in the biggest bind and the biggest emergency that you can't foresee any other way to get cash, I would avoid cash advances on credit cards. Some credit cards have foreign transaction fees. So if you're using your credit card in another country and they have to do the conversion, they charge you a fee on that. So make sure that you pay attention to those transactions if your card has a foreign transaction fee. And something that you might have seen in the assignment that's always in the fine print of your credit card agreement is a default, or sometimes they call them penalty APRs. So if you are late on your credit card payment, sometimes it's 30 days. All credit card companies almost at 60 days. They will increase your normal APR to a default or penalty rate. This rate is as high as 29.99%, which is crazy high annual percentage rate. You're talking 2.5% monthly at a default APR. If this ever happens to you, call your credit card company, tell them to eliminate that rate, or you'll definitely close the card and transfer it someplace else. This is something that you need to avoid at all costs. It could cost you hundreds and thousands of dollars in interest, especially if you have a credit card balance that's in the 3 or 4 or 5,000 range. 30% on that money is tough to overcome. So watch out for the default and penalty APRs. All right, this is just a quick slide to show you how your credit card balance is calculated. This is a quick example of a $2,500 balance and you sending in the $75 minimum payment. Usually the minimum payment's about 2 to 3% of your balance with an APR of 18%. So notice, I show you the balance, $2,500, and I subtract your $75 minimum payment that you sent in, which leaves you a balance of $2,425. Now that new balance is subject to interest. In the next bullet, I've divided our annual rate by 12 to show you that your interest rate per month is 1.5%. So I take your balance and multiply it by 0.015, 1.5%. And you can notice based on that $2,400 balance, they add $36.38 to your balance in interest. So your balance, addition to the interest, and your new balance when you get your statement will be $2,461. So try to look at those numbers. Even though you sent in $75, your balance only went down by about $39 because they added the interest back. That's disheartening when you're sending money in and your balance doesn't drop by that amount. If you defaulted to the minimum payment every month, that simple $2,500 balance would end up taking you 4 years to pay off and cost you $1,000 basically in interest. And that's if you didn't charge one more thing to that card for the year. So sending in the minimum, 47 months, basically 4 years to pay off that amount with $990 in interest. Now, I'm giving you the same scenario. This time you're paying $150 a month. So you're doubling your payment. Notice the difference. By sending in $150, you've cut off 27 months of payments and lowered your interest down to $400. So you saved almost $600 in interest by making a larger payment. This is definitely how you want to do it. Avoid the minimum payment at all costs. I know sometimes it happens, you have to do it. It's better to make the minimum than not make a payment at all or be late, but always send more in if you can. There are many credit card calculators out there that can show you the math on this and how long a simple payment would take you. Check those out and try to avoid minimum payments. So, just a summary on the key vocabulary. Remember, principal is always how much you owe or how much you borrowed. Your rate or APR is your annual percentage rate, the rate that they charge you every year. Time is how long you've borrowed the money. Those are the key variables for interest. Principal times rate times time. The only way to lower your interest is to lower one of those numbers. Obviously, it's best if you can lower all three. Borrow less at a lower percentage for less time. Collateral. Collateral is any asset you pledge if you don't repay your loan. All right. Banks want collateral. Collateral takes away the risk. So when you buy a car, the car is the collateral. If you don't pay for the car, they'll come and take it. If you buy a home, that's the collateral. If you don't pay for the home, they can actually repossess the home. Now, with credit cards, there's no collateral, which is why the interest rate on credit cards is so high. Home and auto loans are 3, 4, 5%. Credit cards are 18, 19, 20s percentage. So there's no collateral with credit cards, which is the reason for the higher interest. Cosigners are a way to keep your interest rates down. However, a cosigner is on the hook and legally responsible for your loan if you default, if you don't pay it back. They're not responsible if you're late. They're not responsible if you're overdue. They're not responsible if you miss a payment and those things. But if it gets to a default, usually takes a number of months for you to default. But if it gets to a default, the cosigner is responsible. And again, a secured card. A secured credit card is you sending money in ahead of time. So you are giving them collateral. And if you don't make your monthly payments, then they start taking that money that you sent in. But a secured card is a great way to get good credit, or for those that have bad credit to reestablish. All right, so that's a lot of the review. I kind of want to end the credit card unit, if you will. We have a little credit card assignment. Again, I'm going to share with you a Google form for the credit card assignment that hopefully will be done. I'm putting a due date of Thursday night at midnight. So you've got the rest of today, all day tomorrow and Thursday to do this. And again, we're going to do some new content on Thursday. More information regarding loans. I'll touch on some different forms, if you will. And Thursday will be our next time. So again, review to this. I'm going to post this on YouTube as well. So it's a shorter connection for me. It's a lot easier than to upload a 10 or 15 minute video, but you'll have it in both. You'll have it in the Google Classroom and you will have it on YouTube as well. Remember, each curriculum or each content area is holding office hours. I'm going to be available every Tuesday and Thursday from 10 to 11 o'clock. I'll post the Google Meet link on Google Classroom. Anybody from any of my classes can join during that time. If you have any questions whatsoever, email me. I'm checking email morning, noon, and night, to be honest with you. But if you want some face-to-face time, we will have a Google Hangout for my office hours every Tuesday and Thursday between 10 and 11 o'clock. The best thing you could do, I strongly recommend everybody, is checking Google Classroom daily. That way you won't fall behind and you'll know everything that's going on. All right, stay safe, everybody. I hope to see you soon.